Let's walk through the 2024 tax forms you may get for HSA contributions and distributions and how they show up on your tax return. Example: Jane is single and had a high deductible health plan in 2024. She earned $51,000 for the year. Her employer contributed $1,000 to her HSA through pre-tax payroll deductions. Jane also added $1,500 on her own with after-tax money. For these contributions, she received Form 5498SA. During the year, Jane used some of her HSA balance from prior year contributions to cover medical costs. She took out $500 in total, of which $400 went to qualified medical expenses and $100 was spent on non-medical items. For these withdrawals, she received Form 1099-SA. Note, all these forms that I'm going to show you and numbers are just examples for illustration. Let's review the W-2 form. We know Jane's salary was $51,000, but Box 1 lists $50,000. That's because her employer's $1,000 HSA contribution, which is shown separately in Box 12, Code W, is excluded from taxable income. She doesn't pay federal income tax, Social Security, or Medicare tax on that $1,000. On her Form 1040, line 1A, her wages are reported as $50,000. We also know that Jane contributed $1,500 of her own after-tax money to her HSA and received Form 5498SA. Let's go over the form. At the top, it shows the HSA trustee along with Jane's name, address, and Social Security number. Box 1 lists MSA or Archer MSA contributions. Box 2 lists total contributions toward the HSA plan from any sources. We know that Jane contributed $1,500 herself and her employer contributed $1,000 through her payroll. So we see a total of $2,500 in that box. Note that some sources say that only the employee contributions would be listed here, while others say that total HSA contributions for the year would be listed. This form is mainly informational, and it often gets mailed out late in April or even May. Box 3 shows if any contributions made in the current year were applied to the prior year. Box 4 is for rollover contributions. Money moved from another HSA or MSA. These don't count toward the annual contribution limit. Box 5 shows the fair market value of the account at year end. In Jane's case, it was $6,450. Box 6 confirms the type of account, in this case, an HSA. So how does Jane claim her deduction? She has to file Form 8889 along with her tax return. On line 2, she lists her own $1,500 contribution. On line 9, she reports her employer's $1,000 contribution from her W-2. Line 13 calculates the total deduction, but only her after-tax contribution, the $1,500, is deductible, since the employer's part already received tax benefit, being pre-taxed. That amount that she can deduct is transferred to Schedule 1, Part 2, as an adjustment to income, which is listed on 1040, line 10. That reduces her AGI and lowers Jane's taxes owed. Now let's look at how Jane used her HSA during the year. She received Form 1099-SA for her withdrawals. Jane took out $500 in total, $400 went to cover qualified medical expenses, and $100 was spent on non-medical costs. Just like Form 5498-SA, the top of the 1099-SA lists the HSA trustee, along with Jane's name, address, and social security number. This form can report distributions from HSA, Archer MSA, or Medicare Advantage MSA. Box 5 identifies which type of account is being reported, and in Jane's case, it's her HSA. Box 1 shows the total gross distribution for 2024. In Jane's case, it's $500. Box 2 reports earnings on any excess contributions. This applies if you put too much into your HSA account and had to remove the excess. The contribution itself isn't taxable if you withdraw it by the deadline, but any earnings on that excess are taxable and must be reported as income. Box 3 contains a distribution code that explains the type of withdrawal. Code 1 is a normal distribution. Other codes include Code 2 for excess contributions, Code 3 for disability, Code 4 for death, and Code 5 and 6 are less common. Box 4 shows the fair market value of the HSA on the date of the account holder's death. If the HSA is transferred to a spouse, it becomes the spouse's HSA. If, on the other hand, the beneficiary is someone else, the account closes and that fair market value may be taxable to them. If the beneficiary is the estate, it's included in the estate's final tax return. It's best to consult a tax advisor for details in your specific situation. Now, Jane has to report her $500 withdrawal on Form 8889, Part 2. Line 14C shows the $500 distribution. On line 15, she reports that $400 was used for qualified medical expenses. That leaves $100 as non-qualified distribution, which is taxable as regular income. Because Jane is under 65 and not disabled, she also owes a 20% penalty on the $100. That shows on line 17B of Form 8889 as $20. Here's how it all flows through her tax return. The $100 of extra income goes on Schedule 1, Part 1, line 8F. From there, it carries to line 8 of her 1040, which increases her adjusted gross income. The 20 penalty goes on Schedule 2, Part 2, line 17C, and then to line 23 of her Form 1040 as an additional tax. Let's review the entire 1040 for her. On page 1, Jane's wages are $50,000. That's her 51 salary minus the $1,000 employer HSA contribution that was pre-tax and excluded. Adding in the $100 of extra income from her non-qualified HSA withdrawal brings her total income of $50,100. She also gets to deduct her $1,500 personal HSA contribution. That's reported on Schedule 1 and Form 8889, and it lowers her adjusted gross income to $48,600. After subtracting the standard deduction of $14,600 for a single filer, her taxable income is $34,000. On page 2 of her 1040, line 16 shows her regular income tax of $3,851, which is automatically calculated. She didn't claim any non-refundable credits in that section, but she has been assessed $20 additional tax on the $100 non-qualified distribution, which increases her total tax due to $3,871. However, that's not what she actually owes to the IRS. Jane had withholdings from her job and prepaid her taxes during the year by $4,500. Since she paid more in than what she owed, she is due a refund of $629, which she's happy about that. Thanks so much for watching.